You're listening to the Big Cast, your source for the latest in financial technology. Brought to you weekly by the Best Innovation Group, with your hosts, John Best and Glenn Sarvati.
Welcome to another edition of the Big Cast. My name is Glenn Sarvati on behalf of the Best Innovation Group, where we like to do cool things with financial technology. And today we're going to be catching up with our friend Lou Grilli, who was about 6 weeks ago now, was out in Stockholm, Sweden at the World Council of Credit Unions conference. We spoke to him before that, and he promised to give us an update and some of his reflections of a different perspective, the full international global perspective of the credit union world. So he's come back to do that with us, as well as in a very busy news week, kind of go over and chat about some of the breaking stories that are affecting the fintech and credit union world. So that'll be coming up in just a minute. Want to remind you, you can always find out more about the Best Innovation Group by checking out our website, big-fintech.com. And we are still, I guess I'd say, recovering. We just yesterday, at the time I'm recording this, completed one of our CU town halls, and a special edition of one. We were broadcasting live streaming it from the Strategic Growth Conference down in Austin, Texas, the America's Credit Union event, and took a different approach to it. We had a couple of panelists on stage. We took questions from the audience. We had our usual audience remote through Zoom, and they were very active also in the chat window. And we managed to get through, I think, about 11 topics over the course of an hour in kind of a rapid fire, pardon the interruption fashion, if you're familiar with the ESPN program. Got some great feedback on that one. I believe we will have that posted pretty soon to the same site as always, cutownhall.com. So I don't think it's going to be out there immediately, depending on when you're listening to this. But check out that site. You'll probably find a replay out there in the not too distant future. And we'll be going back to our usual format on a Wednesday afternoon, as we usually do at 3 p.m. Eastern, noon Pacific, sometime in September. I don't think we've set the date yet, but be watching for that. Always free to join, and we welcome you to join live. You can always go back and check out the recordings after the fact. But if you're interested, it does require registration in advance. It is free to join, but you do need to register in advance. cutownhall.com, and you'll find a way to do that. So appreciate and encourage you to check that one out. One of the big pieces of news this week that Lou and I don't talk about is, and I'm sure you've heard about this by now, Scott Simpson has been named the next America's Credit Union CEO and president. Relatively quick turnaround on the transition. He will be officially taking charge of the organization on November 3rd. And he comes from the California and Nevada leagues, as well as the Utah Credit Union Council. A bit of a shift in profile on this one. Succeeding Jim Nussle, as you know, was a veteran of the U.S. Congress. Although Simpson has spent some time as a staff assistant in Washington, D.C., his primary time is actually from the credit union space, particularly in the league world. Without getting into too much detail here, I think the best way to do it is our friend Mike Lawson caught up with Scott Simpson almost immediately after the appointment. And he's got a great interview that he did out with him on his CU broadcast. So we're going to post a link to that. I'm sure you've heard more about this, and Scott, appropriately, has been making the rounds in terms of getting the message out of where his priorities are and what his focus will be as he takes the helm at America's Credit Unions. But I encourage you to check out that recording with and video that Scott did with Mike Lawson, and we've got the link to that one out there. Another piece of news we just that came up over the course of the last week or so. I'm starting to think of this as the era of the do-over. Everything that we thought was kind of settled is apparently being revisited. Debit interchange, the Durbin Amendment, and the cap on interchange that was contested by some convenience store operators in North Dakota in a suit that's been going on forever. In early August, actually was found in favor of the plaintiffs. The convenience store operator saying that they were being unfairly required to pay debit interchange in terms of the way things were designed. It's, as always, may be appealed. We'll have to see what happens. But I was frankly a little bit surprised by this one. Throws everything kind of back up into question of exactly how it's all going to play out. The Federal Reserve had already gone through the process of resetting even lower the debit card interchange rates. They did this back in 2023 based on a cost analysis. Those new rates had not gone into effect, and they were also being challenged in court. And the plaintiffs in this case and a few of the other parties on on the retailer side have said, well, it's kind of moot now because what's been found is that the Fed exceeded their authority in setting those rates. So setting lower rates, while welcome to the retailers, is probably still not allowed. Well, we're going to see. There's going to be an appeal. There's going to be all kinds of fun stuff. But debit interchange, one of those things that we've been dealing with all the way back since the Great Recession, back around 2010, when the Durbin Amendment and Dodd-Frank came out. Well, we're back. So take a look at that one. A lot of other really interesting stuff going on around the Genius Act, around Zelle. And as I said, Lou Grilli and I just decided that along with finding out more about his trip to Stockholm, Sweden, we'd kind of dig into some of those. So let's have a listen to my conversation with Lou Grilli. Well, someone's always got to sign up for the hard work. And Lou Grilli did that last time by very graciously agreeing to fly over to Stockholm, Sweden for the World Conference of Credit Unions event, their annual conference. What was that, in June, July?
Yes, it was.
I hope the
June, yeah.
The Best Innovation Group corporate jet worked out okay for you? They got you there and got you through customs okay?
Yeah, I didn't even think the private jet could fly that far overseas.
Well, we got a good one. Mm-hmm. But thanks. Well, last time we spoke, you mentioned it was just before you were going, and we said, this is an interesting twist that a lot of people don't have, obviously, the opportunity to head over to Europe or wherever it's taking place in any given year. So wanted to get an update from you in terms of what you took away from that conference. So thanks for taking a bit of time to kind of walk us through it.
Oh, and thanks for having me back on to give you my my trip report.
It's interesting. I mean, it's another one of those kind of, there's a lot of things, as I always like to say, more that unite than divides us. But at the same time, a couple of twists in terms of the way the biggest kind of priorities that pop up in folks, because the U.S. represents the minority of the audience at these, correct?
There were so many things about this conference. And by the way, this is my first time attending World Credit Union Council. And it was eye-opening. And yes, definitely Brazilians outnumbered any other country.
Really? Wow.
Yes, by a lot.
Which is interesting because that's not necessarily an easy flight for them either.
Exactly. Anybody who's attended the opening session of GAC knows how moving the flag ceremony is. And a very similar thing happened at this opening session. And there were 53 countries, 53 different flags that were walked in. It was a moving ceremony. Other things that caught my attention, but one of the biggest things was we talk in the U.S. about the decline of the number of credit unions. Right, it was like 12,000 not too long ago, down to like 4,500, 4,800 now. That is happening. Possibly even faster in other countries as well. That's not a U.S. phenomenon. Australia had 38 credit unions, has 38 credit unions today. 10 years ago, there were 75. The UK has 350 credit unions today, down from 600. And merger is such a common topic. And it's no longer just a opportunistic, the CEO says, hey, we have an opportunity to merge with this credit union, brings it to the board. Now merger is being viewed as a strategic opportunity. And I've even been involved in discussions at the credit union that I volunteer for of, what's the appetite for merger? So that conversation is happening all over the world, apparently.
I mean, and just like all other types of financial institution structures, it's true in banking as well. The U.S. has always had far, far more FIs than other countries. But like you say, the trajectory is the same across the board.
Exactly.
I mean, we still must, dwarf everybody else. Our 4,800 still is a massive number compared to, I'm pretty sure, pretty much anyone.
Yes. Another eye-opening, this is just kind of random notes. Another eye-opening thing for me is we take deposit insurance, right? FDIC for banks, the NCUSIF for credit unions, learns that 80% of credit unions in countries outside of the G20, that is outside of the top 20 countries, do not have deposit insurance. And in turn, that causes people to not trust their money with credit unions. So in those countries, credit unions just don't have that high net promoter score, high trust, high level of love among their members.
I take it that means that in those countries, there is deposit insurance
for banks,
actual banks. That's interesting. When you first mentioned that to me, I thought maybe it was that they don't have it at banks either. So the credit unions are at a distinct disadvantage in those cases.
Exactly. Yep.
That is interesting. I wonder what the story is. But at the same time, the fact that they still exist, I don't know if that's in terms of financial deserts and an access argument, or if it's just that field of membership. I wonder what it is. Did you get any sense of what it is that keeps them humming?
Yeah, the banks, the central bank, especially in many countries, are keeping credit unions from basically doing what credit unions are designed to do to help out the community.
Interesting. So it's a very
Um,
different dynamic in terms of almost an adversarial relationship, would you say?
oh yeah, yeah. Oh, that brings me to adversarial relationship. That brings me to my next um, topic that I tried to grab over lunch, over breaks, the networking events, anybody who like is from a credit union in a different country, and just ask them things like, who do you see as your competition? And that was kind of eye-opening. In other countries, so some countries in South Africa, they view other credit unions as their competitors.
Hmm.
In Ireland, M26, Bank of Dave, those are competitors. Not in many countries, the banks are not necessarily viewed as their competitors since they rely on the central banks for the same purpose that credit unions here rely on corporate credit unions to provide them services. So it's not a global thing that the banks are the ones to watch over your shoulder.
If they think of other credit unions as their competitors, does that erode the spirit of cooperation? I mean,
In those
that's the piece
countries,
that I feel is such a strong differentiator here in the U.S.
that was specific to a couple of countries that I was in a session with. Interesting thing they did at World Credit Union Council is in parallel to a typical breakout session, they gathered people who wanted to attend this into groups of eight, and you were put in a group of eight with other people who are like you. So CEOs with other CEOs, staff with other staff, in my case, volunteers with other volunteers, and from different countries. And that's where we discussed mergers and a shrinkage of number of credit unions as one of the biggest topics. And that's where I learned about things like who do you view your competition? About some countries don't have deposit insurance, and that's where I got into a conversation. There are speaking about competition regarding issuing cards, and this is something maybe I should have known, but several credit unions who are three of the credit unions in my group of eight do not issue credit or debit cards. It's like what? But in all those countries, M-Pesa is prevalent, and M-Pesa is the mobile banking run by the Vodafone or the mobile provider in that country. So those credit unions compete in a lot of cases with each other on rates and branches. And yes, branches are important, and we think of those countries as kind of like banking deserts, but these credit unions do operate branches, and they do have that touch with their members.
That's it. The branch piece is interesting. I'm also thinking in general, a lot of other countries are not as card centric. So the fact that you don't have
True.
a card is probably not something that's going to put you to the same level of disadvantage either. So, and I'm guessing in most of those cases, we're talking, despite the fact that there's a long tail of small credit unions that we would define probably, much higher still than other countries would, $100 million and under. I'm guessing that the credit unions we're talking about in many cases are quite small. Although now
Yes.
that, now that I say that, I mean, if they have enough money to actually come over to this conference, they can't be they're not, as some people call them, shoebox credit unions either.
True, true. Based on the sessions, the main stage sessions and the topics, I did get a feel for a lot of the themes that we talk about, that we deal with here are common themes, like how do you keep your members from getting scammed? That is a global phenomenon. Anti-money laundering, how to attract new members. What's the best way to work with fintechs, and how do you deal with regulatory oversight over third-party providers to the credit unions? AI was obviously, I should say obviously, but just as would be expected, was a topic that kind of wove itself into a number of sessions, like how to integrate AI, how to take advantage of agentic AI, call center bots, all of those topics that we hear about and read about. Those are global phenomenon also.
So again, more that unites than divides us, I guess, is the bottom line on a lot of this. And it sounds like you saw this to be a valuable use of your time and the corporate jet.
Uh, yes. My biggest takeaway, I guess how I'll wrap up my trip report is the thing that struck me is yes, there are differences with debit card and credit card issuing and who you view as competition, but a lot of the themes that we take pride in the credit union world, the spirit of cooperation, the concept of people before profits, that is a common theme held by every credit union that I spoke to. And I just kept thinking of the song "It's a Small World After All."
Because you're a Disney adult. That's right.
Yes, I am.
Well, good. Thanks. I really appreciate that. And I've always wanted to go. On the other hand, I wasn't 100% certain I could justify it. It sounds like there really is a lot of value beyond just the chance to have a bunch of good conversations and go to a nice venue. But
I hope to go again some year.
is it Australia next year? Am I remembering?
Yes, it is. I won't be able to go to that one.
But okay, but that's another a long trip. I'll be curious to see how many.
Yeah, I don't think the corporate jet will go that far. I don't know.
Oh, yours advances all. I think we're going to have the self-driving jet by then too, if you want to give that a shot. So maybe why don't we just touch base on a few of the hot Todd? This is such a busy week right now in terms of all the topics. Open banking. You just sent me a really interesting open letter that you found out about, not just about, I guess mainly about open banking. It's kind of the other shoe dropping. We've got the rule being vacated. It's being rewritten by the CFPB. Why don't you mention the open letter you just saw?
So preface this with kind of what started a revised battle is Chase announcing that they are going to start charging access for fintechs to access Chase members' data. So in other words, a fee for open banking.
And what I saw, I've never actually seen the letter itself. What I've heard, I should say, is those fees in many cases are as high or higher than the going rate that Plaid actually has as their price list. So that would basically take Plaid right out of the mix, totally obliterate their economics.
It would definitely require the intermediaries to increase what they charge to fintechs in order to cover that additional cost. So I assume it would be somewhat of a pass through. I don't think it obliterates the industry like a lot of people are threatening.
Interesting. Okay, so I haven't seen the rates, but I think that was the exact kind of catalyst for this letter and the concern, because if you have an open playing field of saying you can charge whatever the heck you want.
So the letter that I dated August 13th that I just came across was a letter to President Donald Trump. And the list of people who wrote it goes on like 3 pages, but it's a combination of 3 different industries, and that's what made it really interesting to me. Cryptocurrency, artificial intelligence, and together digital wallets and payments.
And it's that last one that I've been totally fixated on in terms of open banking. But
sure,
the fact that they're seeing common cause, that's pretty powerful.
Yeah, and there's a lot of what I would call misdirection in this letter. The cryptocurrency paragraph states that America's ability to lead in the responsible development requires safe, reliable on-ramps connecting our banking system to this ecosystem of cryptocurrency. Yes, true. Severing this connection, so nobody's severing the connection. This will drive innovation offshore and diminish U.S. influence. The premise is Chase charging a fee is going to cause cryptocurrency to leave this country. That's again, it's misdirection in my mind. Artificial intelligence. A lot of companies in the AI industry said the entire promise, this is so much rhetoric, the entire promise of AI to help Americans manage their financial lives hinges on these tools meaning access, open banking access, in order to act as a consumer's authorized agents. And the bank's position, that is the bank charging, would grant them powerful control over the future of financial AI assistance. The third is the digital wallets that says by blocking access, again, nobody's blocking access, banks will stifle the growth of low-cost innovative payments and reinforce reliance on legacy payment networks and increase costs for small businesses that are the backbone of our economy. But the CFPB's 1033 ruling was for consumer access. And bringing in that this is going to destroy small businesses that are the backbone of the U.S. economy. Again, misdirection. The CFPB never had purview over businesses.
I agree this is hyperbole. And I also agree that I think one of the biggest flaws of 1033 was that it did not allow even for cost recovery of the actual expense that was being borne by the financial institutions to provide this data. Not to mention, as we talked before, in many times, the indemnification of what happens when something goes wrong and who's going to be left holding the bag.
Hmm.
Having said that, the natural contrarian in me, I mean, I do have a couple of thoughts. I mean, I think that the notion it's pretty clear to me that the biggest banks are going forward with open banking regardless. Now, blocking is an interesting way of putting it, but if you make it cost prohibitive to do this, maybe that's a bit of a challenge. But you've also got the long tail of, and whether that's going to be a good thing or a bad thing. If there is no open banking rule, anybody outside, the folks who have already seen a business case to do it, proactively, they're not going to make that data available. So there's always that blind spot of data, which again would impede the value of the agents. So I still think it's going to be interesting. Supposedly they're rewriting the rule, they being the CFPB. So will it still be a requirement to make this data available under somewhat different terms than were originally stated in the quote unquote final rule late last year?
Just want to go back to something you just said regarding the long tail. So for several years, I was a co-chair on a task force for the FTX.
I remember.
And one of the things that we were actively working to address is that long tail. And yes, it's true that you're not going to have the smallest credit unions going out of their way to make access to provide open banking access. However, the intermediaries like MX and Plaid, Finicity, and there's several others, are actively pursuing that long tail and having a lot of success in getting that access. So that long tail is being addressed. Whether they will also start charging access and if the access fees are going to be exorbitant or not, yet to be seen. I think there's a happy medium here to allow cost recovery, but still allow that open banking access. And yes, that cost recovery would then likely be passed on to the data recipients.
Totally agree. Yeah, that much more to follow on this one, no question. We also talked about the fact that the CFPB, because they've kind of stepped back, has left the window, the playing field open for other players. New York's Attorney General Letitia James sued Zelle this last week, and I know you're a big fan of the lawsuit, as I understand it.
Yeah, there's some, again, full of misdirection, words being thrown about. People are going to get scammed. There'll always be victims. Yes, Zelle makes for a very convenient payment vehicle in order to get the money being scammed out. But one of the issues that is enabling scamming is not that Zelle is in the middle, but rather there are accounts being opened at financial institutions that are being used by scammers to receive the scammed money. If those accounts were better monitored upon
vetted
opening,
coming in, opening up in the first place.
yeah.
Yeah, I agree. I mean, I agree. The lawsuit does not make a lot of sense to me. I've also found as a Zelle user that they've been, and because I'm sure some people say, why are you making me jump through hoops to use your damn product? But I mean,
Hmm.
when I am paying people who I've never paid before for what looks to me like pretty straightforward and low value of dollar amounts, they're still making me, confirm that I really want to do it about 5 times, which
Hmm.
I'm
True.
exaggerating, probably 2 or 3 times, but still.
Yes. Yes.
So another interesting one. And then there was another letter that was, not the same one you were talking about before, but the whole notion of the ability to pay interest on stablecoin.
Oh,
That
oh,
was another
let's talk
interesting
about one
one.
of my favorite topics. So, stable coins. So, by now, I'm sure most listeners have heard about the Genius Act. And the Genius Act basically provided a framework for stable coins in the US. And there's a lot of good that was put in there. One of the things that came about as this was being written was that banks wanted to be sure that there was a kind of level playing field. So, banks lobbied to ensure that issuers like Circle or Tether don't compete directly with banks by stipulating that there can't be interest on stablecoins. Stablecoin issuers cannot offer yield, is the wording from the bill.
So basically, it's
Um,
dead. It's dead money, kind of like the money you'll have sitting in your Zelle account, or no, I'm sorry, not your PayPal account or your Cash App account if it's not interest bearing.
or your Starbucks account.
Better yet, better yet.
Yes.
Yeah.
However, maybe this wasn't thought out completely, but so stablecoin issuers cannot offer yield. However, crypto platforms can. So you can, as a consumer, you can stake your stablecoin. That is basically put it up in order to be lent out, and so customers will stake their stable coins and then lend at X%, and then the crypto platforms are lending at X plus Y%. That's kind of what banks do with your deposit money. So all of a sudden, banks it's being called a loophole, but now there is a concerted effort. There's a letter asking for members of the Senate, and it's signed by pretty much every bankers association in the U.S. Asking for basically a do-over on the wording of this.
I mean, right from the day it came out, it was like it's one of the largest drive a truck through it kind of loopholes I've seen. And you mentioned the whole thing about the platforms. My thought is, okay, it's not interest, it's rewards. What's the difference? I mean, I'm not exactly sure how you document and codify this in such a way that it doesn't cause the problem. The other issue is the big concern is that it would actually, it potentially could drive so many deposits out of the banking system that it takes away the funding through which loans are extended. If you want to talk about a place small businesses might get hurt, particularly at community banks and smaller institutions and credit unions that have active small business portfolios, that's where I see you could really have a problem. So in terms of that hyperbole in that prior letter we talked about.
Yes.
So this one, yeah, it reminds me of another old slogan. It's like, regulation may be the second worst system after, and the worst is a total absence of regulation. I don't know. Without having any kind of guardrails on this one, it sounds like it could have some pretty interesting implications.
Glenn, I don't know if you plan on posting a link to the letter, but if you do,
yes.
It is dated August 12th, and it is a letter to a number of senators, including Tim Scott and Cynthia Lummis and Elizabeth Warren. It's only 2.5 pages long, but it's requesting, again, a do-over, strengthen the prohibition on interest payments. There's a note there to repeal the section of the Genius Act regarding state-chartered depositories, and then close the loophole in the prohibition on pathways and prohibiting both public and private non-financial entities for basically the yield and interest.
And then the very next day was the letter that you mentioned from the three different kind of constituencies getting into open banking and the ability to charge for that data.
And that letter was to President Trump.
Right. Mm-hmm. Well, see, the Postal Service isn't going broke after all. There's still letters being delivered, at least occasionally. So, Lou, always a pleasure. I really appreciate you updating us on the World Council, and then also a great opportunity for us to kind of talk about the other breaking news as well.
Always enjoyable to come on and talk financial news and payment stuff with you.
And if people want to track you down, LinkedIn's probably the best way?
Sure. Lou Grilly on LinkedIn.
Wonderful. Lou Grilly, thanks so much.
Okay, thank you, Glenn.
So both of those letters that Lou had referred to, both the one about the Genius Act, which was signed primarily by the banks, and the one around open banking, which was signed by a long list. I mean, multiple pages just of the people who signed on to that one from the fintech community around the ability to data share and the Section 1033. Both of those falling in the category of do-over yet again, as we talked about earlier. We've posted links to both of those. All three of those, including the Zelle lawsuit as well, in our show notes. So wherever you're listening to the podcast, I encourage you to check that out. You can go to the website, big-fintech.com, under the media tab. You may be there already as you're doing it, and you should see the show notes right below. If you're listening on Spotify, Apple Music, etc., and Amazon, you'll find them there at the bottom as well. So always try to give you as much content to follow through on these topics, and we'd love to hear what you think about them. So if you have any more thoughts, please do let us know. I'd be curious to hear what you think. As always, we enjoy your feedback, and we will be back again with new content next Tuesday. We're now pretty much heading into conference season. Finovate coming up in a couple of weeks. We spoke to Greg Palmer as well just a couple of weeks ago. I'll post a link to that episode too. So 64 demos out there. Always interested to see what else is going on. And I've got some conversations here locally in Atlanta with a couple of even younger companies that I think should be particularly of interest in terms of the way they're scratching the itch of some other pain points that are just really developing, especially among Gen Z and whatnot. I won't say any more about that, but we'll be trying to track down some interviews around those as well. You can always find out more about the Best Innovation Group. We're active on LinkedIn, Best Innovation Group. You check out our Grand Poobah, John Best at JB FinTech. You'll find me, Glenn Sarvati, via my firm 154 Advisors. We're also out on Blue Sky. I encourage you to check us out wherever. And again, wherever you get your podcast, if you would subscribe, like, whatever it is that they like you to do on that platform, we would appreciate that as well. Back with more content next Tuesday. We'll see what that's all about. And until then, as always, we thank you for listening.
Check back each week for the latest from the Big Cast. Or better yet, we hope you'll consider subscribing for free via Spotify, Stitcher, Apple, or wherever you get your podcasts. If you have questions or comments, we'd love to hear from you. Tweet us at Big FinTech, email info@big-fintech.com, or visit us at big-fintech.com and click on the Media tab, where you can post a comment or check out our archive of hundreds of past episodes. See you next week.